Hola, buenos días. Les habla Carles Gaju, gerente de distribución institucional, y en nombre de BICE Inversiones les doy la bienvenida a nuestro webinar. Hoy nos acompaña John Patrick Lee, Product Manager de ETFs. Él estará a cargo de la exposición que hemos llamado The Future of Tomorrow, Powered by Semiconductors, donde expondrá acerca de lo que ha estado ocurriendo en el mundo de los semiconductores, su importancia en las nuevas tecnologías y el desempeño del SMH, el ETF de BANEC de semiconductores. Al final de la exposición, como siempre, tendremos tiempo para conversar con John, por lo que pueden ir escribiendo sus preguntas en el chat y después las iremos revisando y agrupando para que José Antonio las pueda ir haciendo al final de la presentación. Por favor, siéntanse en la confianza de escribir las preguntas. Le doy la pasada a JP. Thank you, JP, for being here with us today. You have our full attention. Please go ahead.
Great. Hey, it's great to be here again. I love talking to you and your investors and your clients, so I very much appreciate the opportunity to come speak to you guys. We're going to be talking about semiconductors today, and then dip in very briefly on a potential strategy that you could use to invest in semiconductors. Before I get into it, brief background for VanEck. Been around for a very long time, based in New York, but have grown into a global firm with offices in Australia, Europe, China, and then we're really digging into Latin America right now. So leaning into Latin America, a lot of growth and a lot of exciting things happening. And so global firm with, I think, definitely an ETF focus right now. I want to say 80% of the assets right now we have are in ETFs, and it's varied, right? We have mutual funds that focus on emerging markets. We have gold funds, which is kind of what we're known for. We have sector thematic ETFs like SMHs. So we do a lot of different things, and it's a lot of different cool products. And we're also pushing heavily into the digital asset space too, which has a little bit of an overlap with the semiconductor industry, and we'll get to that in a little bit. But right off the bat, when we start, it's important to kind of think about where semiconductors fit in history. If you go back in history, you find these industrial revolutions which really changed the scope of the economic landscape of the world, right? So you can identify and this is just like modern history, but you can identify these technologies which have completely changed the world, right? So you just go back to the 90s and you have computers, right? You go back a little bit further, you've got electricity, railroads, telegraph, phone. Go back even further, you have steam machines and water. And you even go back further, you're talking about the book press and the printing press. But the point here is that technology is important and really important and facilitates economic transformation. So right now we're undergoing another industrial revolution, and what's happening is the real world and the digital world is combining more and more than we'd ever thought possible, right? And so technology, digital technology, is really integrating into every aspect of human life. And so that's happening. Let's just say that's happening, right? But what's important here, what's important for semiconductors, is that they're a part of it across all these different segments, right? So you can identify all these different parts of the economy where this integration is happening, and semiconductor chips are, really driving that connection. So in order for all that stuff to happen, semiconductors have to be a part of that. And so we can just kind of go down the list right here, and you can see autonomous driving, right? Everybody talks about, AI, cars, Tesla, stuff like that. It is impossible to do without semiconductors. It's a part of it. Artificial intelligence, where a computer can scan medical records or X-rays, and they can identify potential tumor, or what they can diagnose a disease based on just inputting information. That's semiconductors. Robots, you've seen the videos of the robotic dogs like walking around, and the scientist in the lab, and the scientist kicks the dog falls down and gets back up. That's completely powered by semiconductors. 5G, Internet of Things. Internet of Things is when your whole house is connected to the internet in some form, and you're able to kind of control the things that are happening in your house from a central location. And then there's one thing on that should be on this page, which is not, which I think is another thing being powered by semiconductors, is cryptocurrency, and Bitcoin and Ethereum and the blockchain. So the blockchain technology is built upon this idea that multiple computers are working together to solve problems and verify the blockchain, right? That whole process cannot happen without semiconductors. So there's this huge growth in all of these different kind of areas. And another thing that's on here is gaming too. Video gaming is massively, you have to have semiconductors to play video games too. So there's all these different like growth pockets and energy pockets where there's a lot of things happening. There's a lot of energy, there's a lot of research, and these are all kind of like separate industries on their own that would not exist without semiconductors. So if you think about all this growth, semiconductors is like the bedrock. It's like supporting all this growth and innovation, and it's not all the same. An AI semiconductor is not the same as an autonomous driving semiconductor. Is not the same as a robot semiconductor. Is not the same as a Bitcoin mining semiconductor. They're all like different, right? But they're all kind of this part of the same family, and they're supporting all these different things. This is kind of another way to think about it. Same basic concept, but they're a part of all these different industries, and it's not all the same. It's being used in different ways. But I think the thing I'm really trying to hammer home is that when you think about the big, exciting investment growth stories in the world, beyond like, whatever, like the inflation. Okay, so the inflation story is its own thing. Outside of the inflation story, any kind of growth and innovation theme around the world, semiconductors are allowing those to happen. So the investment thesis is you can kind of participate in the growth of automotive, communications, healthcare, aerospace, defense, et cetera, by investing in the underlying technology, which is the semiconductors. And this is one way to look at it now, is just to kind of say, here's where the major spend is around the world for these different industries, right? And it's a little bit of a semantics where, okay, communication electronics, that's mobile phones. Industrial electronics, that's your factories or whatever. Data processing electronics, that's a pretty big category. I would like Internet of Things, AI, all this kind of stuff. So this is one way to break it down, and depending on who you talk to, they're going to break it down with a different category. But this is just kind of one way to break it down to say, look, it's not all the same thing. It's a varied and wide ecosystem with a lot of supporting industries that the semiconductors are, supplying their value to. And so this is a really cool chart and a really cool way to think about semiconductors is it's getting faster and better every year, right? So there's this thing called Moore's Law, which says that every year the processing power doubles, right? Or was it every 2 years or every year? The processing power is doubling at such a rate that it's exponential. And so this Moore's Law, this guy came out with this Moore's Law back in 1965. So back in the 60s, he was kind of predicting, look, there's a lot of growth in the semiconductor, like as far as what they're capable of. And for the next 10 years or so, you can expect that to continue. And so what this chart is showing is all these different semiconductors, and then transistor count is how many like little nodes are inside the actual like chip. And the more nodes you have, the faster, more processing you can do. And you can see it just is a straight line up and to the right. So in the 1965, he's saying we're going to grow. These things are going to be able to really get faster for about 10 years. And that's, 50 years later, 60 years later, it's still going straight up and to the right. So it's like the technological process and the amount of processing power that these chips have continues to grow and grow and grow. And so some people have said, and this is we're getting into like science fiction and computer sciences, where it's like, okay, well, there's eventually going to come a time where you're not going to be able to make it. You're not going to be able to pack in all into these little chips all the rows that you need, and we're going to have to switch to quantum computing or something like that. That's not semiconductor based, but the fact remains, semiconductors are what's being used for all this stuff, not quantum computing. So how long is this going to keep going up and to the right? I mean, it remains to be seen. I'm not a computer scientist, but I would say it looks like these chip makers are continuing to increase the quality and processing power of their chips over time, and that's not stopping. And one of the reasons for that is because as a whole, as a group, these companies are very invested in the future. They're very invested in the next step, the next evolution of technology. So if they invest a lot in their facilities, and they invest a lot in like the research side of it. Like it's just like computer science stuff. So they're investing to continue that trajectory of growth. One thing that's interesting about the semiconductor industry too is that just the nature of it lends itself to this idea of economic moats. And an economic moat is when you are a company and you have these like inherent advantages. And these things can kind of like a moat would be like if you're a castle and there's a moat around you, you are protected from competitors because of these things that are built up around you to support your business. So as a general idea, these companies have moats. And the first one we can identify is the switching cost. So that means if I'm a customer of a semiconductor company and I'm getting these chips from semiconductor company A, and they're giving me these chips, they give it to me a certain way. If I'm like, look, these guys are charging me too much, I'm gonna go to semiconductor company B and get them to get me my chip. In a lot of ways, these chips that are being produced are super, super precise. So when you build them for the first time, there's a lot of investment and research that goes into the process. So if I was going to go, okay, you guys are charging too much, I'm going to switch to B. There's a cost associated with that the consumer picks up. Like I'm going to have to explain to the new guy how to make this chip, show him how to do it, give him more money so he can invest in it, et cetera, right? So there's a switching cost associated. And that's why, if you have a good relationship with your semiconductor company for a certain thing, you don't normally switch on a dime. Intangible assets is this idea of intellectual property, right? So in a lot of ways, this technology is super specific again, and it's like you could patent it, right? So if a company comes up with a new semiconductor, they can patent it and nobody else can do it. So if you come up with a new amazing semiconductor, then you put a patent on it and the other guy can't make it. And then you have the ownership of that, and that's it. That's another moat. Network effects are good, and network effects basically means the more people using your semiconductor, the easier it is for you to kind of own the space. So like NVIDIA is a great example, AMD, like all the top 10 companies have huge networks because different people and different companies are using their semiconductors in a big way. And then scale is really, you can think about scale in a couple different ways, but think about a semiconductor factory. Like I kind of emphasize that these are super specific. It's not just like, oh, we're going to make a factory that builds screws and it's going to be really easy to do. It's very, very, very specific and technical. So if you were a company, you're like, I'm going to go build a semiconductor factory, it takes a ton of money and a ton of investment, capital expenditures to get that factory off the ground. And so once you have that factory off the ground, you kind of own, your costs are kind of baked in and you don't have to worry about them anymore and you can just start pumping out chips. And then for a competitor to come in, he's got to spend $100 million on a new factory, right? So there's this idea that these companies, each individually, have these moat advantages against the other guys that are, like, if you think about 10 semiconductor companies, each one's got its own little moat in its own way, right? So the industry as a whole lends itself to this kind of protective moat ecosystem, which is good for business. Okay, so the pandemic, and we'll talk a little bit about these kind of points and then go a little bit further, but the pandemic affected a lot, right? Like, and there were a ton of different parts of the economy that were severely disrupted by the pandemic, and there was a lot of winners and there was a lot of losers. And I kind of would classify the semiconductor industry as a winner of the pandemic. They did pretty good, like from a performance perspective in 2020, and they were able to keep producing chips and keep making money, even though there was a lot of kind of stuff juggling around in the air, right? So I think top left, 50% say digital transformation accelerated by months for years. That is this idea of there were people doing certain things in a digital way. Zoom is like, look, we're on this Microsoft Teams call right now. This is a great example. I never did any Microsoft Teams calls or Zooms call before the pandemic started, like literally. So Microsoft Zoom, video gaming, mobile, Twitch TV, all these different things that were popular really ramped up in 2020 because everybody's stuck at home. And so again, all those different digital themes rely on semiconductors. Let's see what else is here. Yeah, so I think the bottom right is the other kind of interesting one because there's a lot of like geopolitical concerns in the semiconductor industry. So this is, we're saying 53%, name territorialism as the biggest industry in the semiconductor industry. And the reason for that is, back before 2020, there was this trade war between China and the United States, right? So the way to think about the semiconductor industry is super interconnected between the US, Taiwan, China, and the rest of the world, right? So there's rare earth metals in China, and they extract the rare earth and they ship it to the US, and then they do something with the semiconductor, then they ship it back to China. So there's this value chain that goes from China to the US to China to the US to China to the US. And if there's trade war implications, or we're not getting along with China, it can really mess up the supply chain for the we hear a lot about the supply chain today, but for specific to the semiconductor industry, the supply chain disruptions really came into play during the trade war, and you really saw how interconnected everything was, and it's a risk, right? Like, that's a risk to the industry if the US and China get into a war, or stop trading or whatever. Semiconductor industry is going to be hit. And then there's also this idea of Taiwan, where Taiwan creates, I just looked at this before this call, Taiwan is responsible for 65, 70% of the global revenues coming from the semiconductor industry, all coming from Taiwan, right? And there's this, okay, I'm not getting political here, so political opinions aside, there's, this fear that China will take a more aggressive stance with Taiwan and, whatever, like invade Taiwan and take it over. And then China will be in control of 70% of the revenues of the semiconductor industry, which is a geopolitical risk to the U.S., right? Which is why in the U.S. you have people in the government, people in Congress that are trying to get the U.S. to build semiconductor like factories here instead of relying all on Taiwan, right? So now let's go through a couple like a little bit more case studies and what's kind of happening here. Automotive. Think about these new cars. Think about a Tesla. I don't really drive car. I live in Brooklyn, New York, so I don't have a car, but I've ridden in a car before. And I remember when I was a kid, when I used to ride in a car, the windows rolled up like this, and there's a radio, but that's about it. It's not this like technological thingamabob like it is now. Like if you get into a car now, just like this picture shows, there's a dashboard that's fully automated. Your windows are fully automated. You got airbags on the side and up top. You can connect your phone to the car. There's the AI that's like self-driving car. There's all these different pieces of technology that are now in the car. And if like on a percentage basis, so if you think about like, here's a great example. Here's all the different things. Think about all these different spots. Blind spot detection when you're turning left and somebody beep beep beep, somebody in there. I was driving a car on vacation a couple of months ago. Stop. And when you veer out of the road a little bit, the car like pulls you back, right? So there's all these different pieces of new technology that are in the car, and as a percentage of the cost of the car, it's increased a lot. It's gone from 5% to 50% they're anticipating by 2030. So it's a much bigger part of the car than it was in the past. And that you can see that reflected in the price of the car, and as these percentages rise. AI is talked about a lot. And AI to me, there's different ways to think about it. And people call AI when it's really just a script reader or a keyword reader. So, but there's different levels, right? So up top, you've got these robotics, automated driving, business intelligence, smart factory. And then you get into like the crazy, like deep learning and stuff like that. But over on the right, I think is what I think is kind of the way to think about AI and how intense these chips are, is that up top you've got your CPUs, right? So this is the chip that's in your Intel machine. I have an Intel. I'm sitting here talking on my computer, and it's got a chip. It's not really that special. And over here on the right you can see flexibility, right? So the Intel chips, these are just like your generic boring chips. They can do anything, but they don't do it very powerfully or efficiently, right? So as you go down the line, you're going to become less flexible and more efficient, which is to say you can't do a lot of things with it, but the things that you can do very well, right? So you can go down. So GPUs, that's what's being used by people to play video games. So as you go down the line, you're getting more and more complex and more specific. And so down here, when you get to these ASICs, this is what's being used to mine cryptocurrency. So there's chip makers who are creating chips that are so specific that they can only do one thing. If you take this chip that these ASICs, that like the Bitmain ASICs or the Canaan ASICs, you can't use those chips to run your computer or run Microsoft Word on. All they can do is solve the algorithm problems to mine Bitcoin, right? So just think about it like this. There's a flexibility trade-off where you can potentially mine a Bitcoin with an Intel CPU. It's just not going to do it very well because it's not powerful. It's not efficient, right? So there's a trade-off between flexibility and efficiency, and you can just kind of think about these different categories as a grade along the way. So this chart is showing us, let me pull up my screen a little bit. This chart is showing us, look, this is kind of a month-by-month slide, but this on the right, you can just see the pandemic happens March 2020, and then over time, a year later, this is growth figures too. This is not raw numbers. So the growth rate of semiconductor sales has effectively, 4 times. It went from 4% to almost 18% in a year during the pandemic. So that's what I mean when I say, broad, widespread demand for semiconductors across a wide array, wide array of usage. And then we can get into the chip shortage a little bit. And the chip shortage is kind of, we talked about it a little bit, but so essentially what happened was in March 2020, the pandemic happened and everybody's like, okay, the pandemic's here. What are we going to do? Everybody's freaking out. And the car makers, your Ford, your Toyota, all those companies, they said to themselves, we're not going to be able to sell any cars for the next year. We're going to cancel all our order. So we're not going to be able to sell our cars. So we're going to cancel our order for all the chips that we previously had with you. So the chip makers, again, going back to all those modes, is it's not as simple as, oh, okay, I'm not going to make the car chip anymore. I'm going to start making Bitcoin chips or whatever. I don't just turn a button and it starts making a different chip. It's a huge process that involves building a new machine or installing a new machine or somehow making sure that the machines that you have are working. It's like a big deal to switch from production of one chip to another chip. So the car company said, okay, guys, we're freaking out. We're not going to do this anymore. We're not going to buy your chips that we had on order. And then you guys can see my cat in the background. He's being bad. So then all of a sudden, a couple months later, the car company is like, oh, wait a minute, we actually do need those chips. And the chip maker's like, well, what you told us you don't need them anymore. We've switched to making these other kind of chips, and you canceled your order. We're not going back to it, right? So that's why the car sales thing is really like a great example of the chip shortage, because car prices, and especially used car prices, have skyrocketed, right? Because the new cars are not being produced. Like the Toyotas of the world said they were going to make 1 million cars this year, and by the way, we had to drop that to 500,000 because we don't have enough chips. There's all these cases of car makers shutting off factories or turning the factories to 50% because they don't have the chips to make the cars. So you have the secondary used car sales market, which has gone through the roof because nobody can find a car because there's no chips, right? And that's just one industry example, but a lot of it does revolve around the cars for some reason. And when you hear supply chain shortage and auto shortage, it's because in March 2020 they canceled all their order, and then now we want to switch back, but there's too many switching costs associated with doing something like that. And it's not as easy as just turning it on and off. So this is just showing a lead time, which means, hey guys, we're going to buy a chip. How long is it going to take? And you can see the lead time has gone up a lot over the last couple of years, and it's not coming back down for the time being, right? The shortage is going to last into 2022, if not further. And it's a supply and demand issue. I mean, it ultimately comes down to supply and demand. There is too much demand for the technologies that semiconductors support, and the supply is limited because these factories are super expensive and it takes a ton of money to build a new one, and they're already running at full capacity. So the question kind of is, from my perspective, because you have the classic supply and demand chart, right? Like in economics, and you want to be right in the middle. When does it really start to hurt semiconductor companies like that they can't deliver the amount of chips that they have, because they've raised prices significantly and it hasn't hurt their bottom line too much, but there's going to come a time when the limited supply starts to affect the semiconductor companies. It just hasn't happened yet, right? So here's just a kind of a brief summary of what we've gone over. New chip technologies are supporting growth in the industry. All these different trends, auto, 5G, cloud, gaming, Bitcoin, et cetera, are helping to support demand. And then there's these supply shortages right now, right? So that is an industry overview. And then I'm going to touch a little bit on how you can, participate, right? So if you watch this presentation and you're like, wow, semiconductors sound like a great investment, there's different ways you can do it, right? There's different strategies you can employ. And so VanEck, we have an ETF, SMH, which trades in the US, and it is tracking the semiconductor industry. And it's a passively managed ETF, which means it's index based. And what that means is we're not actively managing it, right? It's rules based. So the index provider is coming up with these rules and is coming up with these rules and then applying it to the investment universe, and then it goes from there, right? So the key takeaways here are that it's pure play. So to be included in the index, you have to be doing semiconductor. And then from there, it's just 25 names, US listed, and it really is super concentrated. So the portfolio that you get is really overweighted towards the bigger names. And some of the other strategies that are out there, there's going to be caps on some of these names. We're trying to say this is what the market is. And Taiwan Semiconductor, going back to what I said, now 70% of the global revenues in the semiconductor industry come from Taiwan Semiconductor. So that's a lot, right? So it's got a huge weight in the portfolio. And one thing, just kind of a note, is that the price to earnings ratio is pretty compelling from my point of view. It's at 28.2. That's lower than your S&P 500 growth, but these companies, as I kind of mentioned, are growing, right? So these are high growth companies, and growth has had a rough year this year. I think it's very easy to argue that growth companies have had a hard time, and semiconductors haven't had as hard time as some of the other growth names, but it's been a tough year for growth. But this is GARP right now, growth at a reasonable price. You're getting a pretty solid valuation considering the amount of growth that's underlying the industry. So, if you think about how you want to invest, this is a passive approach where we're trying to provide exposure to the industry, and it's going to overweight those top names because they're the biggest names in the game. So I think, with that, I think that's, we'll go to some risks, right? So that's the industry. This is what the ETF and the index looks like. And then you think about risks, and we've talked about some of these, and we'll go over them briefly again, is you've got supply chain disruption risk, right? Which is kind of combined with the second one, trade war risk. So, or you could think of it as combined. So the supply chain disruption means that the semiconductor companies, can't make the semiconductors that they need to, or that the car manufacturers don't have access to the chips, and there will come a time when that negatively affects these semiconductor companies. Trade war risk I talked about briefly is U.S. versus China. When the U.S. when the supply chain is so interconnected between the U.S. and China, it could also have negative effects, which happened in 2018 and 2019. Valuation risk is just the saying, look, the PEs of these high growth tech companies can get a little overextended at times. It's not like that right now, but there is the risk that these things get overextended and there's a kind of a growth blow off, which is what we saw at the end of 2020. And then finally, regulatory risk, which I think is kind of in the U.S. favor right now, because I feel like the U.S. government and Congress recognizes how important the semiconductor industry is to the global economy, and they're going to try to support the industry and not let it kind of flounder. So I think that's kind of it for me. Sorry about my cat. I'm having to keep him in my room right now because he's been I have to keep him in the room, so I'm sorry if my cat's been yawning. He's being a bad boy right now, which is why he's in here. So I'm open for some questions if you guys would like, and thank you very much for your time, and sorry about my cat.
Sure. Thank you, JP. No worries about the cat. Everyone has their own.
We're working from home. It's crazy.
Yeah.
It's just
no worries. Yeah, it's a pandemic issue. No worries at all. Thank you very much. It was very exciting and interesting, the presentation you made. I suppose most of us is our brand new industry, or in some cases we don't know that much. So I will just open with questions in terms of, if you can explain why this combination in between, Taiwan, why Taiwan had this almost 70% of the production. So we saw at the beginning the holdings, most of them are American companies. We saw Intel, Qualcomm, Broadcom, AMD. Those are American companies, and why they are, so big. Taiwan, in some cases, if you can elaborate a little bit on that, trying to understand why Taiwan is in that majority position.
I don't know the reason why, right? Like I can't explain. Okay, it's just Taiwan Semiconductor Manufacturing Company has just grown into this crazy big company. And so one thing to think about is that there's a difference between NVIDIA and Taiwan Semiconductor. NVIDIA, you could think of, has a group of scientists that are trying to design a chip. They're going to say, we're going to make a chip that, like, if you go back to this, hold on a second. If you go back to this page. Okay, this page. So like, okay, AMD. Like AMD is up here, right? There's AMD made this really fast chip. They're in the business of, we're gonna make this awesome chip. So they have computer scientists that are designing the actual chip. And then Taiwan, and so that's a semiconductor designer or semiconductor creator. Taiwan Semiconductor is what they call a foundry. So they are not, like, you don't see any Taiwan Semiconductor. You see, there's Intel, there's Apple, there's Intel, there's all these IBM, Intel, Apple chips. There's no Taiwan Semiconductor chip because Taiwan Semiconductor is not designing the chips. What they're doing is AMD will say, hey guys, we want you guys to we created this chip design. We want you to create it. We want you to create. So they're like the factory, right? So there's different kind of things that you can do in the industry. They're more along the lines of, look, you tell us what to make, we'll make it for you. And they've just grown into this crazy huge business. So how did that happen? I have no idea. They're just, I guess, really good at it. And they just found out, again, going back to the moat thing, it takes a lot of money to build a semiconductor facility like a foundry. So that's why in the U.S. you have in the last 6 months or so, they were talking about, investing $100 billion or something like that into semiconductor chip foundries in the United States so that AMD and NVIDIA can make it in the United States and they don't have to go to Taiwan, right? So that's kind of where it is right now.
Yeah, right. And regarding the same information you provide us, we are seeing in some technology industry where the business start with the hardware or the production, as you mentioned, of the Taiwan manufacturing, and you have also the software or the design business. So there's two part of it. And in that regards, you are seeing that, in some technology, we're seeing that computers, the hardware business is not doing so well compared with the design and with the software industry. So in this regards, in your opinion, what is the trends within all these companies are in manufacturing, which usually was not the more wealthy industry, is going up because of this lack of production facilities or capabilities? So which part of this industry will move forward better in the better shape compared with the other one?
That's active portfolio managers around the world are making this. You know what I mean? Like, you can make a case for either, right? Like, you can make a case for either. And so I'll re-ask the question on myself. So you're saying, is software or hardware a better play, right? And if semiconductors are hardware, and so I would say they're kind of in the same bucket. You're not asking, is it better to invest in raw materials and commodities or tech, right? We're trying to say, do you want to invest in this sleeve of tech or that sleeve of tech? And I think they're pretty interrelated. And you see, we have a video game strategy, right? And this is a great example. So we include a few semiconductor companies in our video game strategy, specifically AMD and NVIDIA. And so the other companies in the video game strategy are all software, right? So they're selling software, they're selling mobile games, they're not making chips, but there's a couple chip makers. The chip makers have done better than the software companies over the last year or so. So the software companies you think about, they are a lot of times, especially the new ones, unprofitable. Before they get their business going, like a company like Unity or something like that is unprofitable, right? They have a ton of users, or in Roblox, they have a ton of users, they have a ton of people, and a ton of people playing their game. They're making a lot of money, but it's costing them a ton of money too, right? It's different for NVIDIA or AMD, who's been around. In the most case, a lot of these if you look at a software versus hardware, the hot software names, they're usually new, right? Like it's a new company. Hardware companies have been around forever. Like there's no like new semiconductor company that's coming out that's like taking over the world, right? The semiconductor space, this is the semiconductor space. They've been around for a while. It's not like it's not moving around a lot. So I just think that that's a question of, do you want to invest in the super hot growth that's unprofitable, or do you want to invest in something like this where it's like, look, we're supplying parts to the automakers and the Bitcoiners and this and that. So it's just a different business model, and that's like an active management.
Sure. Right.
You know, that's active.
Excellent. A question regarding the economic mode ecosystem you mentioned. I mean, you pointed out these 4 different categories. The switching cost, the investment is so high, the intangible assets, and the patent issue. So I want to combine the issue, the patent issue with the China and Taiwan. So it's a lot of geopolitical, but also the patent, and as we have heard, patents in some cases are not that easy to protect. So what are your thoughts on that specific issue?
So I think, okay, so again, you know, I don't know. I'm not being political again, because it's a sensitive subject from a political perspective, but you know, the US is pretty strict on the IP, right? Like you can't take somebody else's idea and then turn it into your own and monetize it without paying that person or somehow, you know, there's strict rules. Now, China, from what I understand, is not the same, right? Like, and that's when you get into trade secrets, and a lot of that fed into the trade war stuff, right? Back in 2017, 18, 19, is that this idea that China was unfairly taking our intellectual property and using it on their side, and then essentially stealing the intellectual property from us. So that really is the, you know, strikes to the heart of the matter, is that that's what let, you know, the US doesn't want to do business with somebody, you know, that's basically a Chinese state-owned enterprise, who's then going to take all of the, like, essentially classified information about how to make these chips, or, you know, defense technology. You know, think about defense technology. They don't want to somehow partner with a company that's going to just give China these essentially state scientific secrets. So that's kind of being addressed right now, but it really speaks to, I think you're going to see the US do what they can to extricate itself from that situation. And it's not a 1 year, it's not a 1 or 2 year fix. It's a long-term thing that we're going to have to invest in. And then I'm sure China's going to do their thing too. Like I'm sure they're, you know, this thing is not just about semiconductors, right? Like you saw in the news, or maybe over the weekend or the last week, where China launched the missile that went around the whole world. I don't know if you saw that. Like, and so like it's a tech race. It's like a space race, but it's for tech, right? So it's the same kind of thing. We're working as hard as we can in our laboratories. They're working as hard as they can in their laboratories, and you know, they're trying to keep it separated. So, and then the Taiwan thing is okay. So look, China says Taiwan is a part of China. The rest of the world says Taiwan is its own thing. But for all intents and purposes, Taiwan does have autonomy right now. If the Chinese government said, look, we're going to take over Taiwan, they would own Taiwan Semiconductor, right? And that would cause major security concerns and just issues for the entire global supply chain for technology companies. And there's other things Taiwan too, like Taiwan, so they use a lot of water when they create these chips. Like if you think about, like, there's a foundry, so there's like, it's a technological industrial process, and they're spraying water on these things, and it's heavy water intensive. And Taiwan over the last year has been in a drought. So there's also like climate worries that, look, if there's not enough water in Taiwan and they don't have enough water to run these factories and have to shut the factories down because there's not enough water, that's a huge threat too. So I think in the US, I think you could just say, look, we recognize it's a problem, and you know, it's on some level we're trying to look into it and see what we can do, but it's not going to happen.
And easy, sure.
Yeah.
Good. Another question regarding one of these modes you mentioned, the efficient scale and in terms of production, and regarding also the United States production. So we are seeing that, I mean, the state has not that big scale of production, but I mean, it takes money. That's you mentioned a couple of hundreds of billions, whatever. But how long it takes to create their American capabilities to produce tons of it. And we are seeing in some in other industry, for instance, in the real estate industry, some cities that are in the US are booming based on the semiconductor industry. So if you can provide, where do you think the state can provide their capabilities or in terms of productions? Obviously, regarding when the China issue, and then when geopolitical issue get into, I mean, I suppose money is not the problem. Maybe how long it takes to the state to create their own production facilities, or what are the landscape?
So, and I don't know how much you follow U.S. politics, but it's, I think Texas is like a hotspot right now. So Texas has really said to the rest of the country, hey, we want you to come do business in Texas. And so this is not specific to the semiconductor industry. It also really leans into the cryptocurrency mining industry. All these cryptocurrency miners are moving to Texas because Texas is making it easy for them to do business. They have tons of renewable power, and they're just kind of like, and so there's migrations happening in the United States away from high tax states to kind of more business friendly states, right? So it's basically migration. And again, I'm not getting into politics. I'm just saying, like, the vibe is, Tesla is moving from California to Texas, right? All these Bitcoin miners, a Bitcoin miner that was based in New York, they're moving from New York and they're opening a huge operation in Texas. So I would just, on a macro level, kind of think about it in terms of where is a lot of innovation and tech innovation happening, and Austin, Texas is really hot. And Austin, Texas is really hot, and so I would say, and I want to even say there's some major semiconductor thing going on there, but I think these companies, if they want to compete on a global scale with a company like China, like, they're going to have to move to a state that supports them and doesn't tax them too much, right? And so that's Texas and Florida.
And in that regard, how long it takes to create? I mean, if these American companies decide to create their own facilities, and so for how long the Taiwan will have this advantage in terms of
years.
It is a couple of years. Is
like
5 years in 5 years industries. Okay,
at least. Right?
Okay.
In my opinion.
Okay, sure. So taking what you pointed out, we should assume that if no news came to this industry, we will suppose that these capabilities for the next couple of years, 3, 4, 5 years, will be almost the same we have currently. At least some very brand new issue came up to the the information. So this landscape will maintain for a couple of years. That's my point.
So here's the new Xbox and PlayStation, they got released at the end of 2020. So there was a new Xbox and PlayStation released at the end of 2020, around Thanksgiving. Generally speaking, when that happens, it's hard to find during Christmas, but then once you get to January, February, you can get your new Xbox. It's like a 5 or 7 year cycle. When the new Xbox comes out around Christmas, you can't get it at Christmas, but hey, I can get it in January, February. So PlayStation and Microsoft, you still cannot get it almost 1 year later. And they're saying to the people, they're saying, look, get it when you can, because we don't know when the supply issues are going to be done. And they keep kicking the can. So, last year it was mid-21, and then last year during the height of it, we'll be fine by mid-2021. Now we're mid-2021. They're like, we'll be fine in mid-2022. So it's like every time it's just kicking the can. So
kicking the can.
Yeah. So we're going to get to, January, February 2022. I'm not going to be able to get my Xbox, and the PlayStation and Microsoft guys might say, look, we're kicking the can further, right? Like, and you could see the same kind of thing in the used car prices, where it's like joink straight up because you can't get a new car because there's no inventory, because there's no semiconductor chips, right? So when is it going to end? Who knows? I mean, like, we're all in this together. These things right here are not going away, right? Like these things right here. Think about when you talk to clients or, what's exciting, what's happening in the world. These are the kind of, some of the things that are happening. These innovations, this demand for this kind of stuff is only increasing. So there, if you think demand is high now, fast forward 3 years, there's going to be more demand, right? So the supply issue really needs to be fixed. And it's going back to what we've been talking about. I don't know. Is there a huge, is the American version of Taiwan Semiconductor being built in Texas? Not to my knowledge, not that I've heard of. I'm sure they're talking about it, but it's not like it's not being built. The foundations haven't been built yet, so we'll see. We'll see.
Good. Could you select the slide where you have the ETF information, please, JP?
So I didn't put ETF information. So this is
the index. Sorry.
Yeah, this is the rules of the index. Yeah.
So if you can provide us a couple of minutes in terms of the ETF itself. So in terms of where is the domicilio, the ETF, and a little bit about this information for all the audience. In the couple of minutes, we will provide you more information how you can invest in that, can directly also into so. Good.
So it's an ETF. It's domiciled in the United States. It trades like any other ETF, which you can buy and sell shares during the day, and it tracks an index, right? So it's not actively managed. I'm not sitting here saying, oh, it needs to be this or that. Like it's done on a rules-based basis. I want to say it trades on the NASDAQ. So there's two big ETFs in the United States that track the semiconductor industry that are roughly the same size as like 7 billion versus 6 billion. And so this is one of two of the major ETFs that track this industry. And it's highly liquid. It's one of our biggest ETFs that we have. And it's used by different people, right? You've got regular individuals who would buy it because they like the semiconductor industry. You've got short-term traders who are trading it to like a hedge fund. You've got institutions that are saying, no, we're long-term believers and it's part of our allocation. So it's got use cases from a wide variety of different clients, and it's just it's a way to participate in this kind of investment thesis. Without saying to yourself, oh, I'm going to go to Taiwan, or it's one trade, right? You buy the trade, you make the trade, and you get access to all these companies without having to do it all yourself, and so it provides these benefits to the individual investor.
Great, thanks. And for all the audience, also this ETF is registered in Chile in the La Bolsa Local. So for all the investors that also want to invest directly in Chile, they can do it. So I think we are almost getting at the end of this presentation. JP, I want to thank you for being with us this morning, and was very interesting, quite exciting industry. Thank you very much for providing all this information and with all the cases you mentioned of the business cases, and really appreciate. And for all the audience, thank you very much for being with us this morning in BICE. Hopefully we will see you soon. And if you by any means have any question regarding this, the BANEC or the ETF, obviously the BICE team will be at your disposal to have any questions and provide the information as soon as we can. So thank you very much for us. JP, once again, thank you very much. Appreciate. See you soon,
I'm glad you guys all got to hear my cat. I hope that
no worries. I prefer dogs, but whatever. No worries.
See you guys. Okay. Thank you.
Bye, guys. Thank you very much. Muchas gracias a todos por acompañarnos hoy día. Nos vemos pronto.